And, you know, I almost felt like I was on the trading desk on Wednesday, but I have mellowed down. I have calmed down a lot more. I'm more respectful. I'm more tolerant, let's say. Okay. In the old days, that wouldn't work. But so I'll go through the charts. You know, a lot of people talk about technicals calling voodoo analysis. You know, people have opinions. Again, look, technical analysis is not going to tell you the future. Okay. We all know that. I'm a techno fundamentalist. I look at the macro picture. I try to put it together with charts, you know, with experience, with knowledge, with other indicators, advanced decline lines, the volumes, and the put call ratios, and, you know, all these things. You just look at it and you try to read the tea leaves. I have been warning, clear enough. If you watch the videos on the channel, I have been warning. I am not going to say I said so, because not much has happened. Look, NASDAQ is down about 8% from its all-time high. S&P is about 5%. These are garden, at the moment, they're garden variety corrections. That's what they are. But do I see something else here? And the answer is yes. Okay. Am I turning bearish? The answer is no. Am I absolutely super duper cautious? Yes. Am I playing defense? Yes. Am I going to try to hit home runs? No. Am I going to try to hit singles and be swift, be nimble? Eyelash got in my eye. Hold on. Yes, because a lot of singles make up a lot of runs. So I am very cautious here. Okay, but I think because market's at an inflection point. Hold on, guys, 1 second. I got an eyelash in my eye. It's bothering me. So I'm super cautious. Look, markets over long periods of time do extremely well. However, there is like these things called bear markets or drawdowns or corrections, whatever you're going to call it. Luckily, bear markets don't last that long. They last about 18 months on average, if you look at the history. And luckily, we don't get too many of them. You know, the upside is a lot. And over long periods of time, if your dollar cost average, you're going to do wonderfully well. Okay. That's one side of the book, which is my investment account. I have one stock and I'm trying to buy another stock in my investment account. I have Unity Software, and as many of you know, in my long portfolio. And I sold cash secured puts on Kava, which I had bought in the 30s, sold it in 150 range after a year and 5 months. Last year, I'm trying to get back in, you know, I sold cash secured puts at 80. In fact, I mean, at 90, sorry. In fact, yesterday I sold it. I sold the puts at like 4. Stock tanked today. It got up to like 6, whatever. But I want to own the stock. I want to own it, you know, about the half price I paid. I sold it out for, because I still think company is growing, is doing well. But without getting into that, however, I can't treat my trading account, which is a 6-figure account, like it's a $1,000 Robinhood account. I can't do that. I have to pay attention. You know, for some of you, it may not be money, but for me, at my time of my life, stage of my life, I'm not going to blow a $100,000 account. There's no goddamn chance I'm going to do that. So, and yesterday, you know, about 12:30 was one of those moments. I'm looking at it, down 5 figures. Not negative, well, negative for the day, but still positive for the year. And I'm like, okay, this needs to end. And that was it. So flat except one position, one decent position too. It's a pretty big position.